My name is Trey. I am VP of Sales at Unchained. I'm an advisor at Cantilever, and I write a little newsletter called Fire BTC, which aims to help Bitcoiners understand how to put a plan around a path toward financial independence, and helps Fire practitioners, which we'll get into what that is, to understand Bitcoin a little bit better. And that's exactly what we're going to try to do here today. We've got a great panel, some friends of mine here, Jim, Brian, and Morgen. And let's just get into it. Brian, let's start with you. Let's get into the basics. What is Fire?
Yeah, so my name is Brian. I do business development at Fold. I also talk about Bitcoin personal finance on YouTube. I have to say happy birthday to Riot Harrington that turned 4 this morning on YouTube. Woo! Fire means financial independence, retire early. And I don't formally identify as part of the movement, but I do formally identify as someone who just binge watches finance content on YouTube all the time. And so I have a lot of thoughts about how Bitcoin can cross over into mainstream personal finance, on YouTube.
Yeah, so expand on that a little bit, right? Like, what can Bitcoiners understand about the Fire movement? Like, what do they need to know?
Yeah, so I think Bitcoiners need to understand that the two movements are actually more aligned than they're not aligned. And so if you're talking to a Fire person or talking to a mainstream personal finance person, again, whether like Morgen and Jim here, like formally advisors, like when you're talking to mainstream people, meet them where they're at and say, like, Bitcoin's already in your movement. It's already in your spreadsheet. Like, the Bitcoin ETFs were the most successful ETFs in the history of ETFs. Companies in your index funds are already holding Bitcoin, so welcome to the movement. Like, you're here already, and it's the same. I think it's blended, and Bitcoiners need to understand that.
Yeah, I always think about the intentionality that the Fire movement puts towards personal finance, and the intentionality that Bitcoiners are putting towards stacking sats. And there's so much overlap between that mentality, that long-term view, that low time preference. Jim, you talk a lot about being intentional. It's the name of your company, right? Intentional living, right? Where do you see this overlap? How can the Fire movement think about bringing Bitcoin in?
Well, real quick, to the Fire movement. So again, financial independence, retire early. One of my qualms with that is what I see is a lot of people will pursue early financial freedom to the detriment of doing things that are important to them today. And I'm not saying just go and blow all your cash for no reason, but it's taking inventory, truly what's important to me. And that requires you going beyond like what goals I have. Like, oh, I want to retire at 48 and get a beach house. It's like, okay, well, why do you want that? It's like, oh, well, it's not retirement you're after. It's you want more time with your family, to spend time with the people you care about, you love, to pursue passions that are really important to you. You want a beach house, not because you want a place that you have another place to maintain. You want a place that you can curate memories with the people you care about. Like, so you have to go past those goals. And I think a lot of people who pursue Fire, they stop at, I want to retire at 35. And I'm afraid a lot of these people will get to 35 and they'll be financially free, and then they'll go backpack in Indonesia and they'll be there for 3 weeks and realize that they don't have any community and they don't know what they're going to do for the next 45 years of their life. And that's sad. I'd rather see people, again, being intentional with what is truly important to me and how do I align my resources with that, my time, my money, my relationships, my business, my job, those sorts of things. Now, Bitcoin can align deeply with that, because if you have a money that is appreciating in purchasing power versus depreciating, you're going to be a lot more cognizant of the opportunity cost of, do I spend this now or do I wait till later on? And there's times that, yeah, you probably should wait. But there's also times it's like, this thing is important to me. My kids will not be at my house forever, so therefore I'm going to go ahead and make this memory with them today versus putting off until they're old. And it's like, all right, kids, now we can go to the beach. It's like, Dad, I'm 27 and you were meeting me my whole life. So yeah, really taking inventory. What do you value? And I think Bitcoin incentivizes that.
I mean, you're just coming out firing at the Fire people, like right off the bat. I was looking for some common ground here. This is a friendly environment for the Fire people. We want them in the movement, right? Morgen, you've been pretty critical of Fire. I think in a similar line of thought.
Most critical.
Most critical. So just get into it. Okay, so first for the audience, there's an influencer out there, goes by the name of Mr. Money Mustache.
Yes.
And back in 2018, he wrote why Bitcoin is stupid. And it's all the same FUD and all of that kind of thing. And so, when I kicked off my newsletter, that was the title of the first newsletter issue that I wrote. Help us understand, what is this mentality? Why are you critical of FIRE? And what are the FIRE influencers like Mr. Money Mustache or Ramit Sethi? What are they getting wrong?
I love that question. So I want to start with FIRE stands for Financial Independence, Retire Early. I have no issues with financial independence, right? I'm a financial advisor. I run a registered investment advisory company. I help people become financially independent. I help people who are financially independent continue to be financially independent. So I have no issues with that part. It's the RE part that really gets me. And like Jim was saying, if you're just going to sit on a beach and consume the money that you've saved for the past 20 years or whatever it was before you retired early, are you a contributor to society? Are you doing anything to impact society and to make the world a better place? Or are you simply a consumer? And as Bitcoiners, we don't like to be consumers, right? We like to have long-term savings technology in our pocket. We like to contribute to society. We like to make the world a better place. We focus on fixing the money to fix the world, and it just does not align with FIRE. So that's the first part that FIRE gets wrong, is retire early. Simply don't retire early, right? Find a passion that you love, that you can include in your life, that you can make money from, and that you can become so that you can make the world a better place. Don't just sit on the beach consuming things. And you know what? If that means, though, that you have to save some money so you can use some of that money to take a lower paying job or help your community in some way, right? You can make an impact without stopping doing work. In fact, work is a blessing and people should see it that way. And if your job is not something that you love, find something in that job that you love until you're able to go find something else. So that's the first thing that they get wrong. The second thing that they get wrong is just that they don't like Bitcoin in general. And so the problem with that is that they're going to be poor eventually, right? I mean, effectively, they're spending all this time meticulously counting all their pennies and their nickels and everything else that they have, only to realize that the monetary system is changing and they don't even hold the right money. I mean, for God's sakes, it's not a speculative asset anymore. This is the balance sheet asset. And so if you're going to get that part wrong, you're going to be financially independent for what, 5 years, 10 years, 15 at most, and you're certainly not going to be retired early. And so I encourage the people in the FIRE movement to see what's going on in Bitcoin, because it's truly going to be changing how they look at what they're doing.
Well said. I think people come to the FIRE movement, they see inspiration in it because like the fiat world and like corporate America is kind of soul-sucking at times, right? And so people are looking for an escape from that, and they find this path of creating an intentional plan that can be followed, and it does work, or at least it has worked over the past 100 years or whatever. And so it can work there, but you're right, there are some risks, I think, that are not being taken into account from the FIRE practitioners, and certainly that the FIRE influencers are not harping on, right? Jim, I think you have an opinion on index funds, which is kind of the primary savings vehicle that most of these FIRE practitioners really go after. You're saving as much as you can, you're plowing them into VTI or VTSAX or some broad market-based index fund that's in the US. What's the risk there that people are not actually thinking about, especially as we move into more of a Bitcoinized world?
Well, one of the issues with index funds, and they're not evil in themselves, the problem is because our base money is broken, we're forced to invest. So we have essentially taken what's supposed to be an investment vehicle and use that now as a savings vehicle. And that's not how things should be. We should be able to just save our money as money and assume and know that it'll be there in the future with our at least our existing purchasing power, if not more. Now, I think a factor that's not considered from most people in FIRE with index funds, also real estate, I don't know, other things, car washes, stuff. It's the same stuff. They always talk about the same thing. So mostly index funds and real estate is if Bitcoin does what and I'm assuming you think it will do, is it should lead to the demonetization of assets. And so if we have X amount of value in real estate, gold, index funds, collectibles, and if Bitcoin goes up in real terms, then that has to go up to the detriment of these other assets. Now, of course, they can all go up in nominal terms, but if the money printer stopped and Bitcoin went up, that had to do so to the assets of other things, the amount of value in other assets going down. Again, they can all go up in nominal terms, but in real terms. So I think that they're not considering this of, all right, if Bitcoin does this, the value escaping the assets they have all their net worth in will go down in real purchasing power terms. I did some math, I don't know, a while back, and in my opinion, if Bitcoin does what we think it will, at that point it was about 4% of your portfolio would retain its existing purchasing power if you had it in Bitcoin. So if you had all these other assets in a diversified portfolio and you had 4% in Bitcoin, Bitcoin does what we think it will, your real purchasing power would stay flat. I would assume that, I haven't run the numbers lately, but I would assume that's probably crept up a little bit. But I think that's not considered, and that is a risk.
So as part of this accumulation phase, then certainly you should be holding some Bitcoin. I think most FIRE practitioners are maybe not quite there, and they're being told the wrong things from their influencers that they're following. How, Brian, do you think about building your portfolio or your asset base as you are growing, either as a Bitcoiner or as a FIRE practitioner who's maybe interested in Bitcoin?
Yeah, so I agree with all the points made about mistakes that FIRE influencers are making in regard to Bitcoin. I also believe that Bitcoin influencers are making the same mistake back at the FIRE movement. And I think a big part of that is the boiled down sentences of never sell is just not, it doesn't translate. You can't be oh, our mainstream Bitcoin influencers, the main piece of Bitcoin personal finance advice they hear boiled down as never sell, but then at the same time we're telling them that it's demonetizing everything and becoming the world reserve currency. Those two things are not congruent. So we can't be frustrated that regular mainstream high income W-2 people that are looking for personal finance advice out there are considering Bitcoin a non-issue when we aren't giving real personal finance advice, which is why I think this panel is really important. I appreciate everyone being here today. And so I don't partake in the kind of philosophy that there is an accumulation phase of Bitcoin or a spending phase of Bitcoin. That's part of what I actually killed over the last few years. And so I just truly believe that holding Bitcoin is positive, positive EV. Your odds of holding it every single day are positive compared to holding dollars. It's better for the short term and the long term. And so if you can manage that in your own life and have your own personal finance spin on that, I think it's better. And then just one final point to the 4% thing. I think that's really interesting. And I had this argument with another Bitcoin influencer on YouTube. I don't think people that hold other assets, these FIRE people, are going to quote unquote lose. I think Bitcoin's going to backdoor its way into their asset already. The companies are inside the index funds are going to hit 4%, which is giving them the 4%, and they're going to catch this escalator up. And so I don't think it's Bitcoin people win, other asset holders lose. I don't think that.
Well, they'll underperform Bitcoin for sure.
Maybe, but human brains are really good at just rationalize. They're never gonna say that. They're not gonna spike the football and say that. And so it's better. I don't know. I don't think so.
I heard advocacy for getting on $0 from you, right? Because you're saying that every single day Bitcoin goes up. There's a positive EV there, expected value. You should hold 100% of your assets in Bitcoin. Is that right?
Or the message is you can do that. Tools like Fold are getting better and better every single day that you can do that. So the message to Bitcoin people is put your money where your mouth is and live out Bitcoin personal finance. Take it to the next level. If you have a long-term bucket, short-term bucket, your Bitcoin should be taking up more and more a portion of your personal finances at the same time that traditional FIRE people are increasing their allocation as well. That's literally Bitcoin replacing fiat money in real time.
Okay, so, but eventually you have to live off of this value that you've accrued, right? Morgen, how do you feel about yield and interest and MSTY and all these other products that are out there. I think the traditional FIRE approach is really just you build this big stack of VTI and then you sell it down over time. They're not really thinking about like borrowing against their stocks, are they? What about real
Everyone
estate?
wants their divvies, right? So here's the thing. There are many ways to create income, and the biggest myth, I would say, in both the Bitcoin community and the FIRE community, and really in traditional finance community, is that the only way to create income is through some sort of yield stream. And yes, that is one way to create income, right? One way is to earn income. One way is to get some sort of passive income, and we can debate about what is passive and what is not. And the third thing is actually capital gains. You can create income through capital gains, and in fact, it sometimes, depending on your income level, you can even create income through capital gains at a much preferential tax treatment. And so, like, the idea that you have to have yield in order to have income is such a fallacy in all the communities, especially in the FIRE community, where what I've heard specifically about index funds as well, you know, I have my stock and my bond portfolio yields something, so I get my income from there, and then I have my dividends that I get from, like, the S&P 500 thing that I hold, you know, and therefore, like, you know, Bitcoin doesn't have a cash flow, so why would I hold that? And the reality is that, no, if Bitcoin goes up in value, right, you can sell a little bit of that Bitcoin, you can take capital gains, and there you go. You have income. So, right, if money is coming in, it's income. And people don't like to hear that because selling is really, really hard. And I totally get that. So that part of that is wrong. Whether or not, though, you use some of these products, right, is another story. So MSTY is one of these interesting things because it's an option strategy based on, like, the implied volatility of MSTR. And so, like, the implied volatility, when it's very, very high, actually the yield is coming from the options, in which case, right, it's not like made up out of thin air like Celsius and BlockFi and all these other places. It's not like if you don't know where the yield is coming from, you are the yield. However, if implied volatility comes down, then all of a sudden those divvy checks come crashing down. And so if all of a sudden you've decided to trade your Bitcoin, the hardest asset in the world, for MSTY, which is going to drift downwards just by design of what it is, from the roll yield and the trading costs and the fee, right? Then you're basically holding an asset that is going to trend to zero, and you're trading that for dividends, right? And so there's a place maybe for that in your portfolio, but it certainly should not be, right, the asset that you hold. And again, this is not investment advice. I am a registered investment advisor, so I'm not telling anybody to buy MSTY. I'm just giving you commentary on what this thing is. And so I think that's just something, though, that the community in general needs to be a little bit more educated on, about learning how to incorporate income into your portfolio in a way that's manageable and sustainable, and also just you don't put your balance sheet at risk.
What do you think about real estate? Because real estate is kind of maybe the secondary asset of choice in the FIRE community. Maybe there are better tax advantages to owning real estate and that kind of thing. Brian, I know you are kind of a real estate maxi.
I'm going to cut you off,
There is
Brian,
a second
though.
best. There is a second best.
There is not a second best. So real estate, so it's a business. I feel like I often hear from people, oh, I'll just buy some real estate and I'll get this passive income and I won't have to do anything. I'll just get some tenants in there. No, like, you actually have to run a business, right? If you want to run a rental business, then treat it as such. It is not passive income, right? It may be treated differently on your taxes, right? And there may be some deductions that you can take, and depending on your income, it might be worthwhile, right? But that's not a reason to buy something, right? We don't let the tax tail wag the dog, right? We want to make good decisions about what makes sense for our life. And if you're buying real estate because you need quote unquote yield, then you should be looking at your whole portfolio and deciding how you're going to create yield from that, rather than just throwing yourself into a random business and hoping it works out.
The problem with not buying the buildings and not buying the businesses is that if we don't do it, then the fiat maximalists are going to do it. And they're going to keep owning every corner store. They're going to keep owning every rental house. And our bucket, the Bitcoin economy, needs to prove and grow bigger than the fiat economy in order to fix the world. Like, fix the money, fix the world.
So it's a moral issue. You must buy real estate
100%.
for moral purposes.
So many ways to be moral without buying real estate, Brian.
I'll say this. So my wife and I sold our house so we can buy more Bitcoin, and we have been renting for the last year and a half. And like, we just had to get a new fence. And I was like, man, I'm glad I'm not paying for that. So I would encourage, going off of what Morgen was saying, instead of looking like dividends versus these other things, look at total return and volatility. So you can look at sequence of return risk if you're taking distributions. And that's what you should be concerned with. It's not like, oh, where's my dividends coming in versus my income bucket versus this bucket. Look at total returns. And how do you create income from that? And what's the optimum way? And maybe that means incorporating some real estate. Maybe not. But again, I would encourage looking through that lens.
And absolutely. And so some entrepreneur is providing you and your family that service. We want those entrepreneurs to be Bitcoiners so that that money is flowing into the Bitcoin economy rather than the fiat economy.
They're not two different economies, though, right? Like, we're all living side by side. And so if fiat maxis want to own fiat assets, then we should let them own fiat assets.
So it is, except for, like, someone inside Steak and Shake had to make the decision to flip into a Bitcoin company. There's probably, like, 10,000 people left in the United States that are in, like, positions of power in, like, large businesses or, you know, there's a lot of government panels here and, like, things like that. And I really think that, like, there is... Like, being a landowner inside your city does come with influence. Like, being a business owner inside your city does come with influence. And the more that people, of influence become Bitcoin maximalists instead of fiat maximalists, it brings it all, we're pulling the future forward.
Okay, we have to stop with that line because we have just over 2 minutes. This next one is pretty simple answer, though, right? Which is, how much Bitcoin do you need to retire?
That's simple.
So the traditional FIRE,
Less than you think.
The traditional FIRE mechanism for determining this is something called the 4% rule. Essentially means you need to save up a savings portfolio of 25 times your annual expenses, and then you can draw down on that at a 4% rate to cover your cost of living. How do we feel about the 4% rule?
Me?
Yeah. Does it apply to Bitcoin?
So I have very mixed feelings about the 4% rule. The 4% rule is based on a 50-50 portfolio of stocks and bonds and was tested over 30-year periods of time. For FIRE community in general, right, most of these people are retiring for 60 years. If you're retiring on Bitcoin, right, you're very dependent on what the Bitcoin price is relative to dollars currently, right? We're not living on a Bitcoin standard, and therefore you have to be mindful that every time you spend your Bitcoin, right, you have less in your stack. And so there have been lots of numbers floated around, anywhere from, 6%, 8%, 10%, because, Bitcoin's returns have been so high typically. And so if you focus in on, let's say, the 8% number, what happens is that over a really short period of time, you can end up with only 5% of your stack left. And so for most people, right, who have spent so much time and energy and talent working to create these Bitcoin portfolios that they can retire on, right, then basically you end up in a position where you have so much left, like nothing left, right? And so, again, I ask the community, what are we intending to do with our money? Is the purpose to be here on Earth and to accumulate some money and then die with nothing? Or is the purpose to give to your community, provide for your family, create multi-generational wealth, right? You have to look at what your goals are, and your goals are ultimately going to determine what the right portfolio rate is. And in general, I think they should be much lower with Bitcoin. You should try to protect that stack as much as you can. And if that means, that you have to find a fulfilling job that you can work in for a longer period of time to contribute to society, then I think that that's something that you should do. And so I think that appropriate rates should be relative to your age, and that you should be trying to plan out to age 100 because, with the help of God, right, we could live a really long time in the world that we live in now with all the technology and the medicine advances and so forth. And so for most people, that's probably going to be more like a 2% withdrawal rate, which people in the Bitcoin community do not like to hear, because a lot of people have, NGU on their mind, and they're like, well, NGU, and it went up, and now all of a sudden I can flip off my boss and I can go retire, and I'll just spend 8 to 10% of my stack, and that last sat that I own is going to be worth trillions of dollars, so who cares? And I just think that that's a really bad mentality. And also, you don't know actually what the world is going to look like when we go from a fiat standard to a Bitcoin standard. And we don't know what inflation is like and what things are going to cost and so forth. And the best way to approach a financial plan is to be more conservative.
That sounds very bearish to me. Jim, yes or no? We're out of time. Yes or no, 4% rule?
No.
Okay. Quick last word. Shill whatever you got to shill.
I'm a financial planner. Same, all the disclosures, legal, tax. That wasn't that. I run a financial planning shop called Intentional Living. If you have any questions, happy to answer. Yep.
Search Brian Harrington on YouTube. No disclosures. I talk straight to 25 to 55-year-old W-2 regular suburbs people with kids because I'm a regular suburbs guy, uses Bitcoin as money, and I have kids.
You can find me on Twitter. I'm at Morgen with an E, Rochard. My firm is Origin Wealth Advisors, and I have a Bitcoin consulting practice called Money Owners. I'm happy to meet with anybody and answer any questions.
Cool. And you can check out my newsletter. It's firebtc.substack.com. Please go ahead, sign up for free there. Thank you for the great panelists. Enjoyed the conversation.